Hey guys, welcome back to another edition of the Market Review. My name is Vasily, I'm your trading coach and professional Forex trader. It's finally end of the vacation and I'm finally back after 1 month's absence, and now I'm ready for new videos, for new content for you. And I was so struggling to find any good trading setup to discuss with you in this new weekly edition. I think you noticed that the entire trading week was very directional. The market was just moving in one direction, and if you missed that rally, it was so difficult to be involved in trading. And many key levels went broken, and I know that many traders got really bad results during this week. So I decided to focus on mistakes. I decided to discuss with you common mistakes with structure trading. We will discuss key levels and what you probably miss when you trade the key levels. And also we will discuss channels, and I will show you very common mistake that you may make when you trade the breakout of the channel. So, let's start with that and let's see how it's going to unfold. I still believe that this video will be interesting, so enjoy that, don't forget to like it, don't forget to subscribe to this channel, and let's start, guys. Alright, so we're gonna start with the Aussie dollar pair. And as you can see, during this week on Friday, the market broke above the key daily structure. And what is interesting about this particular situation right here, I know that many of you were trying to sell the market from this key daily structure. So I know that many of you have perfectly identified this horizontal key level, yes, this key horizontal resistance, and from that you try to short the market. And based on the lower time frame analysis, once you started to analyze the market on the 4-hour, you notice that once this key structure was reached, the market, first of all, the market formed the doji candle, right? It was very nice doji candle right here. And then the market was rejected. Here was our very nice rejection candle. Yes, the market clearly tried to go up. It tried to close above the structure. But boom, it went rejected. Strong bearish candle, yes, potential movement to the downside, so very nice trading opportunity to short. And moreover, if we switch to 1 hour, you can see that on the 1 hour we have even more clues about the potential continuation of the market to the downside. Yes, the market here even formed the double top formation, right? It broke below the minor structure, retested that, and I know that many of you were trying to short this setup. And what is interesting about that? When this setup was forming, I received a lot of questions from my students, from my followers about this setup, because it looks like the perfect example of the top-down trade, of my own strategy trade. Yes, and many people were wondering if I'm also involved in that trade. But I said no, I'm skipping that trade. I don't want to trade that, and there is a very solid reason for that. So let's return to a daily, and let me show you one thing that you probably may miss. So I return to a daily time frame, and on a daily time frame, what you must always do, you must analyze the price action, right? What do I mean by analyzing the price action? You should identify the swings, the impulses, to get how the market moves. And yes, it is clear that the market right now is bullish, but with the impulses identification, you just see more details and the picture becomes more clear. So here is our impulses. Yes, here was our bullish impulse. The market set the high right here, it retraced, and here we had the high low, right? Then the new bullish impulse, yes, new high close right here, and then bearish retracement, and here the new high low, high low, high, Yes, so why do I show you that? Yes, here we can easily identify the higher highs, yes, and the higher lows. And based on them, we also can draw the channel, yes. So here is the resistance of the channel, and here goes the support of the channel. So why it is important for you to see the market as the set of such impulses? The point here is probabilities. So as you can see, after each high low, the market always sets new higher high. Yes, you can see that after each high low, this was our first high low, then immediately new higher high. New high low, new higher high, right? No pullbacks, no retracements, always new higher highs. And that means that if you decide to trade from that structure, if you decide to short from here, you should realize that the probability that the market will drop, yes, that the market will drop from that level is very, very low. It is low because based on the past performance of the pair, you see that it is clearly willing to set new highs and trading against the trend. Even trading from this key daily structure, it is very, very, very high risk to be stopped out by the greedy buyers. For that reason, I skipped this trade. For that reason, I didn't trade this. I wasn't involved in that trading setup. And as you can see, it was a correct, good decision. And those who decided to short, yes, they were stopped out. And for them, this trade turned to be a loss. And it is very, very, very important for you when you decide to trade, always analyze the probabilities. Yes, always analyze the perspective of buyers, the perspective of sellers. And here you can see that this is the market of buyers. Yes, buyers dominate the market. And it is extremely hard to outsmart buyers and to pick the correct point from where you should trade. And this key daily structure that you were trying to trade this week, this was a very bad entry point, right? And you know, it is funny because also some harmonic traders failed with that trade here, because also here was a nice example of the harmonic bat pattern. Here was a very nice, so cute harmonic, bearish harmonic bat pattern. But, you know, again, this pattern failed here. This pattern failed here because of the probabilities assessment. Though this pattern is absolutely correct, though it is completely meets the rules for harmonic bat, you know, here was a very bad decision to trade that. Now let's discuss where the market is going and where will be the safest point to try to trade Aussie dollar. So to get where the market is going right now, first I'm trying to find some trend line, to find some rising trend line to get where might be the resistance. Yes, and here you can see, just based on the higher highs right here, based on the April's price action, based on the price action in June, we have this rising trend line. Why this trend line is distant? Because here it was already touched more than 3 times. Yes, and it is a nice indicator that for the market participants this trend line is important, right? Now we look left at structure. We look left at the daily structure and we look for some daily structure resistance. But you can see that right now we don't have any structure on the left. We don't see any structure from that perspective, and for that reason I switched to a weekly time frame. I switched to a weekly because on a weekly I can see the price action for the last 5 years, and definitely here it is easier for me to see the historic structure. And as you can see right now, the pair is very close to a key weekly structure. Yes, as you can see, analyzing the performance of the market in 2015, in 2016, you can see that clearly here we have a very strong structure level. Yes, you can see how the market respected it in the past. You can see the reactions of the market in the past from that level. And it clearly tells us that from that point we might expect the next potential retracement on the Aussie dollar, right? And you can see that this weekly structure matches with the potential touch point of our identified daily trend line. So I would say that next week you must definitely pay attention to the Aussie dollar. It looks like we are very close to the next strong resistance. Yes, this resistance, this supply zone will be based on that area between the horizontal structure and our identified rising trend line. So from here, we will be looking for some confirmation, some reversal pattern on the lower time frame to catch a pullback, right? So this was basically the analysis of the Aussie dollar. You can see that I didn't give any trade to you. I didn't give any solid trading setup. But what I was trying to do, I was trying to explain to you how it is important for you to how it is proper to trade structure, how you should properly trade key levels, and why you should always analyze price action before you make any trading decision. Now we will discuss euro yen, and there we will discuss very important mistake about breakout trading of the channel. So euro yen pair. First of all, we're going to start with the 3-day chart, because you can see that the market right now is stuck on some level. You can see that we were rejected, the market stopped bullish rally right here, so we need to investigate why the market stopped and whether we have some key structure here or not. So we look left at structure, and you can see that here the market reached a key 3-day structure. Yes, it can be the 3 days and weekly key structure, and from that a bearish reaction is highly probable. Now we're gonna switch to a daily, and on a daily what I want to show you is the channel. Here goes the resistance of the channel, yes, the rising resistance of the channel, and here goes the support of the channel. As you can see, this week the market violated the support of the channel to the downside, and you can see that here the market retested the channel the first time, retested the broken support. And by the way, from here I was shorting the market. I was shorting the market trying to catch the bearish wave, but this trade closed on a break-even. The bearish reaction from its support were very limited. We retraced, but the reaction was limited, and then the market returned to retest the key structure again. So why I'm showing you all that? On a daily, you clearly see that right now we retested the support of the channel one more time. Yes, here was the retest point of the support of the channel and also of our key structure, yes, of our key horizontal structure, and from that we were rejected. So it looks like it is a perfect selling setup, it is a perfect swing trade selling setup, and why not to short the market from here, expecting the continuation to the downside, because clearly channel is violated, structure is respected, we went rejected. Yes, clearly it looks like the market is bearish. The problem with that is that the market still sets high lows. Yes, so here is our previous high low, and this is our new high low. And though the support of the channel is violated to the downside, you can see that we can do very interesting thing right here. Here is our rising support. What we can do, we can make the adjustments. We can make the adjustments of the support and draw it like that. And you can see that still, based on that drawings, this support respected here, 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 yes, and here. More than 3 touches, yes. And now I think, now the market follows this rising support. And this process is called the support adjustment, yes, the trend line adjustment. So what we did, we made the adjustment of the trend line based on a new high low, based on this new high low. And you can see that from that perspective, the market is not so bearish as it seemed to be before we made the adjustment. From a current perspective, it's still possible that buyers will buy from that, will buy from the support, and from that still we may expect the retest of the structure again. So to properly trade this setup right now, to properly catch the bearish continuation, we need to wait until the violation of this high low. This high low must be broken to this downside. This high low level must be broken, because before that it would be still risky to be in that trade. We trade against the trend. Once again, it is against the trend trading, not trend following. We trade against the trend, and it is very risky. Trading against the trend always is very risky, and we should wait for many different conditions until we are 100% sure that the market is reversing. Here we are not sure. Here we still following this rising support. We still respect and set new high lows. So it is too early to say that the market is reversing, right? So that's it, and now let me tell you something. So as you see, this video was mostly about mistakes. It was not about the actual trading, it was not about making the trading decisions, but it was about, I think, losses avoidance, about the minor tiny things that help us to avoid losses. So I don't know what you think about that. Let me know, how do you think about this format of videos, when we just discuss common mistakes, when we discuss the situations when newbie traders most likely lose money. Yes, so let me know in the comment section below what you think about such educational videos. And moreover, guys, I wanted to tell you that I started the Instagram page, and there there I will post the exclusive updates to the trading setups. There I will share the feedbacks from students, from my followers, from VIP members, and I think it will be interesting. So the link will be also in the description below. So I will see you next week. Good luck next week. It's autumn starts, new season. It will be interesting. You see that dollar is falling as crazy, and I think based on that, the correction will soon start. So probably we're gonna get very nice trading opportunities there. So good luck. Thank you for watching, and once again, don't forget to subscribe, to like, and all this, guys. Good luck.